Lee, there are battle lines drawn all over the street, whether or not we have bottomed. There really are two camps in here. There's smart people on both sides of this. Where do you fall? Have we bottomed?
I don't know if we've bottomed. Now, my personal opinion is we haven't, right? But that doesn't really mean anything. What I do think is that we're going to retest the lows. And retesting the lows doesn't mean we're going to make a lower low from that March 23rd low. It just means we're going to head there. So I've got buddies like Tony Dwyer who say maybe buy like 5% above or something like that. We've got my queen of all technical analysts, Helene Meisler, who says we're definitely going to fill in that gap around those lows. I'm in that camp. So while I can't say we're going to go lower, even though that might be an opinion of mine, I do think that we're going to try to get down into that region. And I think that that's what the most important thing is. And that's and then you have people like, Doug Cass, who I've been reading for a long time, who seems to think that the low is in and we head higher. So it's very stressful, let me tell you. But what we've done is yesterday near the close, I made a tough decision where we decided to go and raise cash. And while we still have a lot of equity exposure, we're at the lowest amount of equity exposure that our investment policy statements allow us right now. And so I think that speaks volumes about where I'm at.
So Lee, it sounds like you're using this mini rally here, and it's not mini anymore, we're up 20% from the lows, as an opportunity to lighten up in anticipation of something in the future. So I guess as you see this move, what to you are the biggest drivers of what the market is seeing right now? Is it as simple as case counts look a little better in Italy and New York and that's enough, or is there something else at play here?
No, I said a few weeks ago, once we can see the peak, not at the peak, but once we can see that peak of peak whatever, peak death, peak infection, peak exponential, then the market's going to rally and it's going to rally hard. But that's a bear market rally. We still have to contend with the recession. 9 months ago, I was talking on this show about the inverted yield curve and how that's going to foretell, whether it's 18, 24 months from now, we're going to get some type of recession. So says an indicator that's worked 100% of the time. Obviously, COVID has pushed that time frame much quicker than just a year later. It pushed it in, about 7-8 months later. But just the fact that we might get over the health scare, the bottom line is I was drinking beer with my buddy last night, 20 feet away on the street. And he said, why is it, Lee, that you think the market can go lower? I said, on May 1st, are you going to take your kids out to a restaurant? And he told me very grimly, I'm not taking my kids to a restaurant until there's a vaccine. I said, that's your answer right there. So I would use this rally, do whatever you want with it. I used yesterday's rally to raise some cash. If it goes higher, I've got more shares to sell, but I think we retest. If I'm wrong, I'm wrong. I've been doing this for 22 years and we'll see. Nobody knows.
Hey, Lee, we talked on the phone one day when things were really crazy. Yeah. And you told me that the time to buy was going to be when you wanted to go outside and throw up. And that's when you should get in.
Yes.
Did you were you able to execute on that? Did you ever get to that point in this craziness?
Yeah. I felt really physically ill a few days before the low on that Monday. So we were buying around 2350, 2400, and we saw that volatility. And I definitely felt physically ill, which is why I'm not so certain we're going to pierce through new lows. I'm still going to look to purchase near the retest of the lows. And I think people like my favorite people, like Dwyer and Meisler, I think that they have some good information that you should check them out and pay them some money to find out how those people are playing that. And the way I play it personally is somewhere around 2350 is the first time I start loading up the truck with this cash. But please keep in mind, we can go lower. And so I wouldn't shoot all your ammunition just at the December Christmas Eve 2018 retest. I think that would be foolish. I think that the only thing I would sort of add on my own personal opinion, I'm not convinced we're going to have 3 or 4 bear market rallies. This is extremely fast. And I think the recovery could be quicker than people realize. And so I think if you're thinking you're going to play bear market rallies 3 or 4 times like we had in the great financial crisis, I don't think that's going to happen. I think it's going to be a faster version of what we saw in 2001 through 2003. But at this point, we're just guessing. I'll let you know when I feel physically ill. I'll feel physically ill when we break about 2,100, and at 2,000, if we break 2,000 on the S&P, I'll be buying and I'll feel sick.
I like to have all my indicators. You know, there's a lot of different ones out there, but I think that's possibly a reliable one. Lee Munson, as he said, sold some equities, raised some cash into this week's surge. Great to get a chance to talk with you with Portfolio Wealth Advisors. He's the president and CIO over there. We'll see you later, Lee.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.